So when it comes to entry and exits, I use pin bar to my own advantage when I want to enter, and then I use support and resistance to my advantage when I want to exit from the market. We have two entry modes which I definitely use. We have the traditional method, and then we have the 50% um, 50% method also. I use the pin bars to my advantage when I want to enter any form of trade at all. So looking at the pound dollar here, we have price trading below this support level here. We have price trading below this support level, and you can see that it is a well tangible support because of this and then this and then this. We had market close below here with this candlestick, which we saw the close back above with this candlestick here. So looking at things, looking at the 50% entry mode, which I told you guys about. Looking at this closely here, we can see that when the market was still trading around this region, we're definitely not having any move from here. We saw the market rally all the way to the downside, rejected from this support here, and then broke it with this candle confirmation. We saw the close back up, which was signaling we are not ready to go to the downside yet, which the market closed above with this candlestick. We saw the pullback come in to this um, support level again, using it as a support, which is normally what the market does, And then you saw how since then we haven't had any form of pin bar formation until this one came out here. Until we had this one came out here, which I want to throw more light on this pin bar because it is definitely what we are going to be looking at. So the 50% entry mode is basically the 50 when you draw your own ruler from the top of this pin bar to the low of this pin bar, you see we have what we call, if you divide this pin bar by 2, this will be the half of it. This will be the half of it. Let me quickly change this color to, let's say green. No, that is not bright. Let's say red. So this is the 50 entry mode which I am telling you guys about. This is how I enter from here. I wait for a little retracement to the 50. Whenever the market forms a pin bar, which is for the 50% entry mode, I wait for the retracement. I do this by taking the ruler, then I look for where the 50% is, which is the middle of this pin bar candlestick, and then I draw a line where the middle is. I wait for the market to reach that target, and you can see we tested this level with multiple wicks, telling us that yes, the move is to the upside, and you can see after we touched that place, this was my own buy limit. Notice I didn't enter any trade from here because I was waiting patiently for a pin bar formation to form below here. If you watch the video I made about the long tail pin bars and the rest of them, you see that this pin bar aligns perfectly with this support level we have here. This pin bar aligns perfectly with this support level we have here, minus this one. You can see how this one formed on top of the support, which is not really a nice pin bar for you to be looking out for your entry mode or for your entry criteria. So this was when I saw this, and then I entered at the 50% 50% of this pin bar. My stop losses came below this pin bar, which we had about 45 pips. You can put your stop losses below structure, which is definitely the best way to put your structure to definitely the best way to put your own stop loss, because you want to allow the market to breathe. As a swing trader, your stop losses shouldn't be less than 50 pips as a swing trader, depending on how the structure looks. Um, sometimes you may get less amount of pips for your stop losses, but then as a swing trader, your stop losses shouldn't be less than 50 pips for your own good. So this was where I now entered, and then we are looking at an area where you definitely have your take profit. Looking at your area where you definitely have your take profit, which for me, I place my take profit according to structure. And here is the next structure which I'll be targeting for the take profit for this trade, which definitely the market did its thing. And then we saw the market hit that level. After it hit that level, we had a fake out, which the market closed back and retested, and then retested this overall trend line. So the second mode of entry is a traditional method of entry, which definitely many people know it. But then I think this is more a conservative method of entry, because if you are entering low here, you can have more less amount of stop loss, less amount of pips to the downside. But then this traditional method is a very risky one, which is definitely entering above the pin bar, which is definitely entering above the pin bar, which is setting your own buy stops above this pin bar. Immediately you see a pin bar, you are setting your own buy stops above here. This is what I mean. You're setting your own buy stops above here, then your stop losses comes below here. You can see that this is the double of what we did on the this is the double of what we did on the 50% entry mode, which is if you have a high risk tolerance, you can as well this will be the best move criteria for you. This is will be the best entry mode criteria for you, which I recommend for most people, because you want to be sure that the market is going to go up rather than entering at the 50% retracement of this pin bar. So it all depends on your risk tolerance and the way you manage your own psychology. For me, I would prefer entering at the 50%, which minimizes my own loss appetite, and then maximizes my own take profit level. You can see this is roughly about 1 to 7 risk to reward. But if you're entering at this will be about 1 to 5 or 6 thereabout risk to reward. So you have to also know your own risk appetite, and then you know which entry mode criteria best suits you. So I'll catch you guys in the next video. I love you guys. Peace.